morning, good afternoon, good evening, whatever time it is that you are watching this. It is Sunday, June 11th, 9 a.m. Eastern Time, and going to go over a very quick review to get everybody ready, and we will continue to reiterate this during the course of the week. We have CPI on Tuesday. We have the FOMC meeting on Wednesday, and we have quad Opex on Friday. Very important, very important, very important. I will start you out with, first and foremost, that we have now 3 green Fridays in a row. 3. You can go back, start tracking your Fridays. It's a pattern that you tend to see with high probabilities that you don't get a 4th green Friday. As we had a Monday starting out for the week, we had that 0.65 going back to May 22nd, 0.7 going back to May 30th, not even 1 point, closed flat. And last week, Monday, we were down 9 points, down 8 points. This will make a difference as to the spread that we are going to be sharing for the start of the week tomorrow for everybody that wants to do 0 DTEs. 2 green closes in a row, okay? 2 green closes in a row. We did get 3 green closes in a row over here on May 30th, starting on that Monday, which again was flat, 0.07 cents green. Again, you can go through and track your data, track your history. 3 green closes in a row. That was the first time we had that since end of March. Not something that you tend to see. And from a chart point of view as to where we reached, how we reacted, we have swapped over now from the bullish chart onto the bearish chart because we broke above that 43.08. I have gone back. I did not want to share this because I didn't want people getting over exuberant, having had this long history now of crushing the VIX, having 0 range intraday, 28s, 22s, under 20s, trading all last week, 32, 25, 35, 37, 31 intraday range. A lot of people are fed up with this market. This is how you tend to become emotional as you start to get to a major turning point. And with 4 green weeks in a row, 4, 1, 2, 3, 4 over on the SPX, we will shift focus over onto the QQQ, which also closed green on the week, up 7 cents, which is now 1, 2, 3, 4, 5, 6, 7 in a row. If you want to call this down 1.5 points a red week, it very well can be. That was Opex back in April. That week closed red. Other than that, you were almost down a point at the beginning of April, and you had another long streak. We've basically been on 11 of the last 13 weeks on the QQQ have been closing green. Tesla has its longest historic run of closing green on the daily in history. So as of the March lows, we are up 25.41%, 72 points on the QQQ. Looking over as to where we are up 32%, 31.96% year to date on the close on Friday at 34.50. Now, highlighting these retracements as you always like to see when 2 retracements line up at the exact same place, 320.48, 321.43. That would be the max expectation for any kind of downside over on the QQQ. And I'll go over why that would be the max and something not to focus on, why I've been trying to keep everyone looking towards only 340, 345, 350 on the QQQs. Come over onto the spreads, and again, another one to look at is it is now on Monday going to be 12 trading sessions since we have had a minus 1% pullback. More importantly, as we had the full moon take place here on June 3rd, 95 years of data, 95, have the average seasonality of the June high coming right around June 6th, and then seeing weakness go into the middle portion of the month with some slight strength, recovering from that onto some further weakness into the end of the month. How we broke above that 43.08 and came up to that 43.15 and rejected it swaps me over from the bullish count onto the bearish count. And I want to stress about the bearish side not going and doing what we would normally do, because we were trading a 23-24 VIX where we would go out of the money. We have a 14 VIX. A 14 VIX says stay at the money and take advantage of it. Don't go spending money and buying way out puts. But I will bring you onto the charts before we go on anywhere else. And this is where I've had to swap to. I've had to swap now to the bearish view. And that being that as we hit that 43.15 there on Friday, coming off of our lows, what we have now, and you're going to see a lot of this all over the place, and I want to try and keep your attention away from it. Everybody is going to be looking at the A, B, C, where C equals A up at 43.73. I'm still charting that we should be getting a little bit of a dip here as we go into this week, and then getting a bounce up to that 43.73 before we get a larger pullback, but we're going to play that by ear. As of right now, this is what we're looking at, and I'll zoom you in here onto a 30-day so you can get a better understanding and a better look. On that 41.04 that we had coming off that 40.48, we've had just consistently higher lows, consistently fractionally higher highs until we got into this breakout here, which started the beginning of the month. We've got a clean 1, 2, 3, 4. Possibly this is a week 5. For me, this is a week 5, but this will be a 5 coming on here for our 1, 2, 3. And our 4 should pull us back somewhere here in the range 42.12, 41.85. And as long as we don't break below 41.65, we have the potential that we will make that move up there into that 43.73 area. 43.73, plethora of combinations of multiple Fibonacci extensions coming from all over the place. So this 43.73 is going to remain within view as long as we don't break down below 41.65 during the duration of these next couple of weeks. So just keep that in mind. There is a potential for one last final move to the upside before we do get a much stronger move to the downside, which, again, I don't want you to start falling in the trap, which is definitely painted perfectly for what a lot of people are saying. Let me go backwards before we go forwards. This is the bearish view that everybody is now capitulating onto. They're all moving on to this big bearish view where this was our A, which I totally agree. This is our B, which I've been warning about, that I am a little bit frightened that this might be all of our B. Should it be all of our B, we're in big fucking trouble. And that's why everybody you see out there posting some price targets now. I'm going to avoid that as long as we're staying above this 41.65, 41.36. For now, all that we're looking at is we are due a very, very, very nice pullback, as we now have 4 green weeks in a row. We had 5 over here as we were coming off of that March low. Then we went sideways because of the introduction of the new keyword, AI. All you have to do is say it 55 times in your conference call. Your stock is going to go up. AI, 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 AI. Coming back over here into last year, over as we went into the August high, which we are at right now, 3 points away from on the highs Friday, we had 4 green weeks. And you saw the result that took place after that. You had 3 green weeks over here. Now, everybody wants to talk about, yeah, but this is a new bull market. So this is your bull market going back to your 2018 lows. We had 9 in a row as we came off of December lows, which some people may remember Steve Mnuchin and the PPT, the plunge protection team, calling all the central bankers, everybody together to say, come on, guys, we can't raise interest rates anymore. And Jerome Powell came out in that first meeting and said, we won't. Boom. Had our run, couple of red weeks, had 3 in a row, downward as we had our April top, going down there into that June bottom, 3 in a row, 3 in a row, 6 in a row as we were into November, into December, and then COVID hit. From COVID, you've had 3, 3, 5, 3, 4, 5, 3, 3, 5. So your streaks are very dependent on the common sense approach that things are getting a little bit streaky, they're getting a little bit out of hand. But again, I will zoom you out. This is what everybody is going to start talking about now. They're all going to start talking about 29.96, 30.10, and again, revisiting the COVID lows down here at 21.76. This is what everybody is now going to be viewing and everybody going to start speaking about. I would stay away from this because, again, we are in a very short-term period. And when our 4-hour gets oversold, we always get a bounce. So when our 4-hour gets oversold, we will make adjustments as to what we need to do, and then we will continue to move along as we do. Wider view over here on the NASDAQ. The NASDAQ, with this QQQ run off of March, I've got it as a completed 1, 2, 3, 4, 5. However, 361 and 366 do look very, very strong to be visited, exactly like you have over on the SPX with the 4373. So, because of how this has been over the past 30 days, with that move to the upside, this being the low that we placed over here back in beginning of May, we can zoom this out even closer and come on to a 15-day. And as long as we hold this 347, we should not have any problem by heading upward into that 361. More so, even though this can potentially be a nice little dip, the downside view that I'm looking for as we go into the end of the month is this gap here at 336. 336, 331 is the gap. Now, coming over here onto the QQQ, what lines up the best would be a move somewhere between 334 and 330. How 320 and 321 line up very, very nicely. So we'll leave that alone until we need to revisit that. But those are where your numbers are. Coming back onto your charts, one of the things that we saw there on Friday was the VIX actually having a little bit of life in it. The VIX closed green, fractionally green, but it did close green. And those aren't the kinds of things that you want to see if you are going to continue to be exuberantly bullish. So as we are heading into this weekend, or I'm sorry, this week, these are some things that you need to know. So this is quad Opex, okay? This is quad Opex, and we're going back here to March. March, Monday, close down. Tuesday, big green day. Wednesday, down. Thursday, down. Friday, down. December 2022, September 2022. June and March, completely different scenarios. And I can show you here on June, you were down 151 points, down 123 points. You don't need to see a chart to see that you were oversold. Over here into March, many remember us bouncing in March of 2022 after having that drop down to where Russia invaded Ukraine at 41.15. We had our bullish run into the end of March. Green, 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 green. Strong greens all there through March. Come back over here onto 2021. Go back to December 2020 to March 2020. You can see here a very clear pattern where your Fridays are red. Your Fridays are red. So as we go into this Friday, we are automatically going to be approaching it with the understanding that your Fridays on quad witching Opexes close red below the previous close. Now, we have the FOMC day coming in the middle of the week. We've been raising rates over here since March of 2016. March of 2016 was also during Quad Opex week. As you see there, we had a 25-point gap, a 107-point range, and we closed up 95.41. Bring you back onto Quad Opex. There's your Quad Opex right there, the Wednesday, 95.41 as we raised rates that day. Now, coming back onto your FOMC days, and again, going back all the way to December of 2021, where we were not raising rates. We were not raising rates in January of 2022. 100-point ranges, consistent. December 2014, you had an 88-point range. July of 2022, you had a 88-point range. That was why on May the 5th, we didn't make as much money as we expected to make because we only had, or May 3rd, we only had a 59-point range where we were already calculating that we were going to be getting a pretty significant range. More importantly, looking over here onto the gap, May 3, March 22, February 1, December, November, no gap, no gap. And I've shared with you guys before about FOMC days. Trading 0 DTE or 1 DTE or getting into something for later in the week, absolutely zero reason to get into that trade until after 2:30. 2:30, you can get into the trade significantly after 2:30, 2:45, 2:50 when the questions and answers begin. You've got an even better opportunity to make a decision as to what date, what strike you're looking for. This February 1, 2023, I will point out, as it was a green close with a big range, February 2 was where we topped out at 41.95. So, a lot to be considered as to where we are from a chart point of view and everything else. And here, I bring you into your Quad Opex months. I'm simply highlighting where the month is so you can see the action and activity that took place during the Opex month, and also being able to look at where your RSIs were during the course of that month. As you can see right here, we are pretty significantly overbought with a marginal sell divergence, which is waiting to take place over on the RSI. Bring you into another little hint of a hint. June 12th, 2023, tomorrow, this will be the cover of Barron's magazine. This market has legs. The bull is back. Why more stocks should join the tech leaders? Because again, like everybody knows, there are only 7-8 stocks which are actually performing in this rally which we have had that's been taking place. Which brings you again over here to the core risk model, which again, this is not from me. I got it from a friend and have been looking at this and paying attention to it. And it all fits exactly into the situation that we're at, where upside is extremely, extremely risky to be taking on. It's been extremely risky, and that's why during the course of these months, we've consistently, during April, resisted at that 41.55 area, consistently closing below 41.55, constantly. End of April, little pop, 2 days, right back under that 41.55. And then we come into May and we had that one pop, 1 day where we closed above it. Then we went up there into the 4200s and we came right back down under 41.55 for a couple of days, and it was all over. And we were into the 4200s these last few days. We've been up here less than 2 weeks. It's a very short-term visit. We blasted through the 4200s. We weren't even there for 2 weeks before we went and printed 43s. That's your blow-off. That's exactly what a blow-off looks like. And when you bring in your core risk model, your sentiment, everything else, then you start looking over here at, again, we're not trying to read tarot cards or, shit like that. But on Friday, Goldman Sachs raised their price target of the SPX over to 4,500. you can see the history that they've had as they have continued to raise prices. They raised prices on February 6th prior to our having our decline. They cut prices over here in September prior to us hitting our bottom. They are not, they're almost as if they're hinting to everybody, hey, can you get the sarcasm about what we're doing, with every way that they turn around and they predict their price futures, their price cuts, and the model just simply doesn't work. So again, we've got the FOMC meeting. This will not need to even be a concern until Wednesday afternoon. We have CPI coming on Tuesday. That will be dealt with as we see our close on Monday. We have quad Opex this week, which again, very consistent pattern that we have had over and over and over again, as we are no longer in March or June of 2022. We are very overextended as to where we are. We have again come over here to 43.22 once. We have 12 trading sessions as of Monday without a minus 1% visit. We've had zero range, 2 green closes in a row on Friday, 3 green Fridays in a row. We are up 2.7% on the month, this being a 4th month in a row that we would be green. And I will go ahead and bring us on to that just for shits and giggles. Load study, and we're looking for big charts. And here is where we are with our monthly RSI. So again, from a monthly RSI point of view, very clearly bullish. Looking back at your monthly candles, 1, 2, 3, 4. You had 1, 2, 3, 4, 5, 6, 7 as you were here over in 2021 with the ride up into August. So not counting it out that it can't go in and continue to be green months, but you have a very low likelihood that you are going to continue a pace of multiple green months, considering where we're at and what's going on. This is our move going into the 2018 highs. Prior to that, you had your 4. It's again, it's something to pay attention to, but not something to go betting on, which is why I've tried to keep everyone away from that 4183 strike, keep you up at the 4290 strike with our credits. From a weekly point of view, just coming in here again, and here we are on our weekly. Again, not extremely overbought, but definitely into the overbought levels, same as we were over here as we were heading into the 2022 highs. So definitely something you want to be paying attention to. And on your daily, again, you can see a very clear sell divergence since we had this move over here at the end of March into the start of April. Consistently, yet we have continued to just grind higher into this bearish ending diagonal, which again leaves us no choice except to expect 4,200, 4185 to be our drop zone, with 4,200, 4213 our most bullish drop zone, and 4165 being the you cannot break zone. You break below 4165, we got big problems. So have a fantastic Sunday. I am apologizing for being a little bit long-winded on the weekend, but looking forward to a very good week. And since it is breakfast time for everybody out there,
thank you everybody very much. Don't eat too many waffles.